Hi guys, Any, aka the NocTrader, your friendly neighborhood swing trader, back again with another episode of Pip Talk Podcast. And Today I'm here with another trader, forex EA specialist, Darren. How
Oh,
you
I don't know
doing?
about that. Hi guys, how you doing?
What would you refer yourself to as then?
Just a normal guy,
Just a normal guy.
trying to do his best.
All right.
Yeah,
Okay.
that's
Hu-
probably the best thing.
Humility, first part of the emotional intelligence of a trader, mate.
Yeah, hopefully.
Yeah. So how you doing? How you doing, Darren?
Yeah,
Before I,
good.
And before we go into just chatting about your trading journey experience, can you tell us a little bit about yourself? I've given a little intro, but I'm sure you can do a better job of
Yeah.
how you
So,
refer to yourself.
I'm Darren. I'm from the UK in the Midlands. And yeah, 38 actually now. Was 37, but 38 now. Married, 5 daughters. Busy life with 5 daughters, of course. Hence the full head of hair that I've got. Yeah, trading journey started, I guess, all the way back in 2007, 2008. So a long time ago.
Okay.
And not in, I guess, the forex space, not in the algorithm space. A lot of people had a message the other day.
Yeah.
Was I in like quant trading and all of this data science type stuff? And no, not at all. I think how I've migrated into this is through testing, experience, exposure to the markets, and understanding logically what I think will work to then create some rules around it. But no, that's me sort of outside of trading. But yeah, started all the way back in 2007, 2008.
And what was the landscape like in trading at the time when you were trading? Because obviously things have evolved so much since then. But what was the landscape like? Were you trading on like a retail account with one of the IG or Trading 212 or one of those
Yeah, it
ones?
was IG. Yeah.
Okay.
Well, to be fair, it was probably even before then. So 2007, 2008 was I was more interested in the stocks and shares side. So the reason I got into it, I was working with somebody who said, oh, Nighthawk Energy, an oil company, you need to buy some stocks in that. I was like, well, how do I do that? What is it? Why?
Yeah.
And at that time, probably a bit like crypto is today, the big gains were in penny stocks and probably oil exploration companies that found black liquid stuff under the ground. And I think I used TD Waterhouse at the time, bought some shares, probably only 500 quid's worth or whatever. And then just got a bit of you're then on the London Stock Exchange bulletin websites and you're seeing things fly up and you can see there's an opportunity, but there's a complete lack of, I guess, understanding with what it is you're doing, which is probably very normal for how people enter this space today. Yeah. And I guess the ones that keep going and come out the other end are the ones that ask the right question, persevere, and get a bit obsessed. I think obsession's a great word. It's often dealt with in a negative way, but you have to be a bit like a dog with a bone to absorb as much information and navigate through the shit and find the good stuff to make progress. And I got lucky with one. There was a company called Range Resources, an Australian-based oil exploration company. Tripled my money in a short space of time.
Nice.
Paid for my wedding and a few other bits back in the day. And then Gulf Keystone Petroleum. Some people that are probably watching this might have heard of them. They were a penny stock that went up to £2 a share. That was a multi-bagger, a bit like, again, a crypto. And what was interesting with that is one of my bosses at the time, he had put some of his self-managed pension pot in that, and it already gone up loads. And I said, that's gone up loads already. So I'm waiting for it to get to £4. It's like, okay.
Got greedy.
And it never did, and ended up being a penny share again or dropping massively. And I think that's such a problem where this whole, this fear and greed, but when is enough? When do I close? What am I truly comfortable with? And this comes through what I talk about in my community, which is effective decision-making and removing. If you get hindsight bias, it's because you probably didn't go through all of the decision properly that you could at the time. I wish I'd have done this. If only I'd have put more in, if only I'd have closed then, these are all, it's a bit self-sabotage, all ifs and buts. I even put a post on Instagram once, if your grandma had a pair of balls, she'd be your granddad. I quite like that quote. But it's not helpful. So I think if you can put rules around, we'll get to this in terms of algorithmic mechanical trading, rules around where you're out either by loss or by profit, it completely removes that I wish I would have done X or Y. So stocks, and then into IG Index, doing some spread betting on some of these, on Gulf Keystone, for example, on the charts, guessing. When you look back, no clue what I was really doing at that time. Drifted into a bit of indices because that's what their platform's probably mainly based around, Wall Street, DJ30, and even options. I want to learn more about that.
Yeah, that's a more recent occurrence.
Well, options was still around back in the day, based around, so
maybe they got rid of it after, because when I joined, was there options there? I think it was just
it's mainly in indices, but I've not looked recently, but years ago. So basically what would happen is DJ30 will have massive gaps on market open from the close from the day before. So let's say Wall Street will open 150 pips down on the day. That gap normally gets filled at some point. So you could basically do an option for it to close above, buy in at 20. If it gets to where it closed the day before, that'll be around 50 level, and then you close on the 30 difference. And that was quite an effective strategy. But I think, the Americans, if any of them are watching, options is bigger than FX over in that area. I think, trading using our edge strategy, even Apple, Amazon stocks, there's a massive opportunity to tap into.
I think there's options trading on Tesla still on IG, but I don't know if they've got some of the other stocks. I think they're trying to expand to more stocks, but I think they've only got Tesla right now.
It's worth another look. Definitely worth another look. And then into, maybe at that time, ads on Instagram or something. I'm talking a long time ago. Something pulled me into just naturally then gravitating into forex, and I've always been, up until the last few years, I have done technical analysis, but I found it got to a point where until you broach into other areas, one of the things that kicked me into that was reading and learning about the turtle trader story, where this guy was passionate about being able to get anybody to trade with an edge and turned nobodies into making millions of pounds. And I thought there will be a way to create a mechanical trading strategy that I could get anybody to follow and have an edge in the market and be profitable. And actually, if I could take 100 people off the street right now that have never traded before, I am extremely confident I can do that. Because the biggest challenge that I find are people that think that they know better. They think they know where the market may or may not go, and that affects their ability to make a decision based on data, at that time. Through things like, I see it every day with our community, we see things like outcome bias. So something's worked for a day. All of a sudden that means this is great. Well, it's worked for a day. We've got actually 39 months of data on another approach that you've probably given up on because you had a losing run or something.
Can I interject? When you say something works for the day, do you mean that someone has taken your EA tool and tweaked it themselves, or what do you mean by work for a day? Because aren't they using something that you've given them?
For example, there's a recent one that springs to mind, an AUD USD settings on our bot, and maybe there was a comment in there about maybe the take profit should be shorter because it went into profit and then reversed. And my point was, that's one trade.
Sample size one.
39 months worth of data on a load of ticks and candles that show us that this is the longer term approach that works. But there will be times where it doesn't, and that's okay. But if you change something, expect to get a completely different result over the long term. And it's just getting people to understand that something that you've seen someone else run, settings or whatever it might be, or a signals group that you've seen a result for a day, it doesn't mean anything. And that outcome and that bandwagon effect of following, in herds, what may or may not work, is for those individuals having the ability to compute, okay, what have I learned from it? Is it a valid thought? what can I forward test to see if that's valid or not, instead of just going on a whim after seeing something for a day or so.
Yeah. Okay. So what you're referring to is just kind of like a situation where they take what you've given them and then they tweak it themselves because, as you said, they think they know better, and that's where the issue lies, not where they've where they've taken your EA and then used it as it is, then it shouldn't be an issue.
Yeah, we've got the EA and the edge strategy too. So in terms of me creating a strategy that people haven't traded before, I could literally put them in a room and go, right, do this, do that, do the other. Yeah. And so, for example, let me talk about the edge strategy. We enter a trade, it either hits take profit or it hits stop loss, or we follow it with a reverse signal. There's three outcomes. An experienced trader who might be looking at the chart, and you put experienced in inverted commas, might be spooked, by a support resistance line that they think they see, or a bullish engulfing candle or a pin bar candle, and then think, shit, I need to close this position, or I need to trail my stop to entry, or I'm going to one of those things. So lots of traders will over manage their positions.
Sometimes too much knowledge is sometimes easier for people that have no knowledge of the markets to enter and do that.
Yeah, they'll just right, do this, do that, and and I'd be confident that somebody who hasn't got them preconceived knowledge or whatever limitation would do better than someone that thinks that they do. And I'm talking from experience here. When we launched the edge strategy based on creating something that, like the turtle traders, that could follow. Initially, it was just, long and short, like a trend indicator. But then there was still some discretion around where's your stop loss and where's your take profit. And we see so many, I see them on my Facebook feed like everyone else, your Lux algos and your other things like this. And all they simply do is say, buy here and sell, but it doesn't tell you where you would be placing a stop and where your exit is. So there's still discretion, and that's going to be different between 100 traders in a room. So I wanted to make sure that there was no discretion even in that. So we based that on ATR and taking into account the volatility at the market at that time. And when Connor and I was doing the testing, and we still, might have been limited at the time by, oh, hang on, but there's a trend line break where, you still saw the odd pattern and there was more examples where we were wrong. We thought we were right, and the trend and that strategy played out. So I think for me, the reduction in chart time, the emotional bias that we all have to thinking that we're right in a particular trade can be exhausting, because you've invested time into thinking, actually, this is a solid setup, and you don't expect to lose on some of them. But also the ability to have data at your fingertips. So anybody trading discretionally, if they were to do manual back testing for the last 3 years, that would probably take them a few months. And even then, there's a big variable whereby the decision that they think they're going to make in that moment is very different to what they might have made at that moment in the past. They might have had a shit night's sleep, not have felt,
so many variables that can't be taken into consideration when you're backtesting. Of course.
Absolutely. And look, and I totally get there's numerous ways to make money out of the market, loads of different ways. And there are people that will do it right. But they are also people that have still built rules around that technical analysis. But so many are literally loading up the chart and going, let's toss a coin. We can be right 50% of the time, I'm sure. So it was mainly that passion around, okay, I think we can create something that someone just has to follow. And as long as they've got the ability to understand that data and put the work in to get in that confidence and belief in that strategy, right, they need persistence and patience. So ultimately, the traders that if I was to take 100 people off the street, I'm not looking for any financial experience or whatever. I'd be looking for people that could show me some patience, resilience, and the ability to follow instruction. They would be the core skills for somebody to stay rational in absorbing losses and just literally emotionlessly executing a trade without being warped by what's happened in the past or all of that stuff. Hopefully that makes sense.
Yeah, no, it does. So then obviously the psychological part still plays a big part, even when you're using the EA. How did you so when you started building out the EA, how did you even start? Where did you look to come up with the rules? I'm not obviously not asking for the secret sauce, but just kind
secret sauce. A lot of people ask for the secret sauce, but the Colonel never reveals the secret sauce. So both really. So our edge strategy is coded in PineScript in TradingView, and I wanted initially that to be more of a visual thing. TradingView app loads up whatever device you're in. So as opposed to MetaTrader, you can't see that on your phone, right?
Such an ugly tool, MetaTrader.
Yeah, but then that developed into then adding the stop loss and take profit. And because I wanted to prove this worked. I didn't just want something that looked nice on a chart. I wanted to be able to go, look, there's the data for it. There's 700 trades. It's 2018. Win rate, average win, average loss, and there's the journal. And that's what PineScript enables you to do. Yeah. So that was a matter of lots of bloody trial and error, to be fair, and having a logic to go, okay, well, moving averages could be one, ADX, ATR. There's a load of different ingredients you can add into the mix to try and, if one thing work, if 3 or 4 things work in isolation, can they work better if we put them together? Yeah. Is there more confluence there? And yes is the answer to that. But then some things logically that you think might make a difference, like, for example, okay, so edge is a trend strategy, but markets range more than they trend. Yeah. So a trend trader has to be very resilient to their range losing runs. And they can be quite big because we have a lower win rate on a trend strategy. There might be a 35% win rate, but you might have an average 3 or 4 to 1. The winners will massively outweigh the losers, but the losers are just the cost of business, and that's just how that works. For example, we added in then an ADX filter. So ADX, once that gets to above 25, that's then a trending move or a more volatility in a direction. And when we added that, it had a negative effect because we were later into that move. Okay. Right. So one of the things that all of this has taught me is that there's balance in everything. There's nothing that we can do that's just going to have total upside without having an understanding of the negative effect of that is this. So
and it's the consequences.
Yeah, absolutely. And you've got to, this is why, okay, so most EAs don't work, right? Your experience of this and mine in the early days of maybe seeing an ad for an algo bot and thinking, what's this all about? Learning that I needed a VPS, setting it up, and then it popping your account. Yeah. Well, what most people that create these things do is sell you the fucking dream. Yeah. And this is the best thing since sliced bread, blah, 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 blah. And I actually sent a voice note to somebody earlier on today about that. Literally what you want me to tell you is you'll be a millionaire in a few weeks. That's not the case at all. In fact, if you don't respect these tools and understand what their liabilities are, you can be humbled very, very quickly through greed and through chasing, etc. So my answer to this is, I actually think most things that we've all probably tried work. Yeah. But what we haven't been taught is to manage the downside risk properly. So most of these EAs have probably not got an equity function like ours has, an ability for you to say, right, if this happens, I'm out. I'm never going to let my trading get to a point where I'm relying on hope. Yeah. Because that's completely out of your control, right? And I also then think if someone's set up an EA and it's blown your account, you chuck it in the bin. That was a pile of shit. That might have been gold. That might have been a gold, that might have been.
Then why did it blow my account? Where was the parameters in place to stop it from blowing my account?
Yeah, so if you'd have had a stop loss in place and then given it another go and stayed, like starting trading and hitting a stop loss. Yeah. You think, oh, trading's a scam. Well, no, there will be times where, and this is what I say, nothing works 100% of the time, but markets range more than they trend, and our EA will absorb a lot of trending moves too. But there will be times like coronavirus last year and the relentlessness that we saw in the markets, whereby you'll hit your equity point and it'll be as painful or as not as you make it, subject to your risk appetite at that time. And we then have an ability to react to that. If volatility on pairs increases, we can increase the pip step to allow for it, reduce our risk, and add some logic to the tool. And this is something, again, with the community, I say, look, you'll get out what you put in with this. If you understand this tool that you've got, what each parameter and setting is doing, then this is here for you for the long term. You'll be able to steer and drive it and understand what it is you're doing. If you just plug something in and expect it to work 100% of the time without any loss, then, you know, that's very naive. But unfortunately, there are a lot of people out there that try and position things in that way.
That's what quite sparked my interest in your EA, well, your system in general, because when I saw your landing pages, like time wasters do not apply. If you want a quick win, don't apply. And that's normally the marketing strategy of most of these companies, to say but the fact that you're trying to dissuade anyone that was trying to just find a quick cash machine I was like, okay, maybe there's something to this.
Absolutely. And I tell you what, I'm very close, and I still might do it at some point, to trying to vet people before they start, because there are individuals that, and I can smell them a mile off. And I mean this nicely to everybody as I can, but I can tell the ones that just don't get it. That won't put the work in. You know, there are a substantial amount of video content in what we do, because ultimately I want people to understand. I don't want to spend my life on repeat answering the same question 23,000 times a day either. So that the information's there, right? And if you want to choose to take it in and watch, then great. You know, I'll help you every day of the week. But if you keep asking me questions and you can't be asked to go and watch the stuff and do the work, then I can't be asked to fucking help you either. So it's just this entitled mindset that then turns them into a victim. And, you know, if anybody can relate to this, then take responsibility for your own learning and for your own outcomes, because these outcomes are a consequence to either you trying to shortcut what you do, or not listening or testing enough. You know, people join and then they're straight into a challenge. It's like, whoa, you have no confidence and belief in the tool that you're using, other than the website and your first impressions, because you've not tested it and to see what it's doing and how it's working and how that makes you feel. You know, I'll often say, if something happens with the bot on your account that is a surprise to you, then you've not done the work.
So people always say, obviously, the market is ever changing. So that's why you don't want to backtest too far, but too far away, but back behind, because it becomes less relevant as you go further back. So does that mean that your EA has to be fine-tuned and tweaked as we go along, because the market will inevitably change and maybe some of the parameters that you have becomes obsolete?
I don't necessarily think they'll come obsolete, but it's just understanding which you might navigate or change. For example, let's look at gold. So we've got some great gold settings. I've been live and forward testing with gold for a good few months now. And if I do a back test since 2014, 2015, it's shit. Gold is very different from 2014, 15 to how it is now. It's like trying to do a back test on Bitcoin to a degree. You know, when Bitcoin was 1,000 to when it's 40, it moves very differently. So there are, you know, I've seen one advert of an EA that's got a 20-year back test, and what a load of bullshit that is, without any disrespect. Because it would be very easy for somebody to write an EA, most people probably won't know this, that could do a back test and remove key dates, right? So if you see something too good to be true with 20 years back test data, just ponder that, because you know, if there's key events that have blown that EA and someone's written, ignore them dates in the code. I mean, that's just silly, isn't it? But it's about understanding that. So for example, like the edge strategy, we're limited by trading views, Pine script, and the amount of data that goes back for. But when does the strategy not work? And is it just a normal losing run? So you can use things like Monte Carlo simulation, standard deviation simulation, which I've done with a lot of our strategies. And we hit a losing run on GJ. It's not had a great 2-3 months with how it's moved, but it's well within the standard deviation of the results that we should expect to see based on the results that we've seen so far. So when you look at data like what we do and the information we have, we can do all of that stuff. But if you were completely discretionary, you wouldn't have that ability to do it. So, you know, that just because on 700 trades, it's played out in this particular way, if you take all those numbers and model them all up, that's what Monte Carlo simulation will do, and give you loads of different spectrums for how that could have played out. And I think it's a matter of understanding, could this strategy be now failing, or is it just normal probability? And it's normally probability, because of the spectrum of the data as to what we can expect. And what we teach our traders to do with the edge strategy is plan for the losing streaks. So for example, if we've got a 50% win rate strategy, like we have on a euro pound pair, math will still dictate, like if we toss the coin over 100 times, we will get a losing streak of 7 to 10 at some time. That's just math. So if you started with £1,000 account and never wanted to have a maximal drawdown of any more than 20%, then we'll take that 20% and factor in that losing run within it. And if you were just trading one pair, your risk on that one pair might be 1 point something percent per trade. So my view is, and I did a post on this the other day, that psychology and how you feel completely correlates to how you trade. So if we take two traders, one trader with 1,000 account trying to trade 15 pairs in his watch list with no real plan and no real risk management, he's pretty fucking stressed, right? But someone with £1,000 account who's trading one pair at 1 point something risk per trade, who's planned for a 10 streak losing run on that strategy, he's pretty calm after 3, 4, 5 losses.
Because he's planned it all in.
Because he knows in his head, I've planned for 10. Probability tells me that 10 might happen, and that's okay. I've planned for it. And worst case scenario, if that happens, I've hit my maximal limit on that account. And if that was to happen, there are numerous options available. You know, there's no right or wrong in any of this, is there? Let me re-forward test this for another 3 months. Let me see, is this just that probable losing run, or is it just going to come back out the other end again? Or I might just reduce my risk a little bit further, and, you know, whatever. These are all, there's no instruction manual to go, when X happens, do this. But these are all decisions that we can make with the facts that we have in front of us.
So are people now using your strategies to pass prop trading firms? And I believe that you guys have started your own one as well.
Yeah, we have. And I wanted to do something a bit different with it. I didn't want to be... These models are based around most people failing, because that's how they make their money, right? And I didn't want to be a busy fool with that. I don't want to just be setting up accounts, and it goes against what I'm trying to achieve for people, which is getting funded. And so why I wouldn't build a model based around where people don't come through the other end. So my philosophy with it is that if you can't run a live account within the parameters of a funded account, a smaller one, you know, 500 quid or £1,000, then you're not ready to run 100 grand or whatever. So it was the logic of prove that you can run your live account. So if you started with £1,000, can you make 13% within 60 days without losing 13% first? That's quite a fair number. It's not encouraging the wrong trading behavior, which unfortunately some of the challenges do, and that's because they need to see results within that time period. But it can be a conflict, can't it? And I think that's a long enough period of time for someone to trade sensibly and properly, and to also understand that if they're using our tools too, that's fine, but I want you to understand what you're doing with them. I'm not going to give you, right, here's the settings to run on your £1,000, because you're not learning anything by that. But what it does do is, well, it removes this pressure. So for a lot of people, spending £500-600 on a challenge is a lot of money to lose. Should they lose it? And a lot of them are going into it not really allowing for the fact that this is not a straightforward thing to pass. Because you've got probability. Your trading strategy can work over a long period of time, but it has to work within that 20 odd trading days. So removing that stress was a key part, and it's great to see. I don't know how many we've probably had 15 to 20 past the pre-evaluation. We've had a batch of traders now past stage 1, and we've got probably 10 to 15 in verification. So it's a recent thing, hence why I've not got more data than that, but we've all got to start somewhere.
Yeah, of course.
We've got a metric system that people can track. And yeah, we'll just see how it goes. But we want to get to a point in POW where a year from now, our community is withdrawing 400K a month. That to me, I don't just want to have challenge pass certificates on my wall.
Yeah.
I nearly did. I want withdrawal certificates, right? I want to know that, I mean, the simple fag packet numbers, 100 traders with 100 grand accounts is 10 million, right?
Yeah.
So 4% a month, 400K. There are some traders who are already aiming to try and do 30, 40K themselves, right? Is that doable? Yeah, I totally believe it is. And that is fulfillment for me, because that's a lot of people telling their bosses to do one, right?
Yeah, definitely.
And for them completely changing their life. And I know that sounds like a cliche, but it is totally true. We've got one trader in our community who's set to withdraw 19K from the prop trading account after his first month. The most he's ever earned in his day job is 3K a month.
Yeah, I saw the screenshot that you sent actually about that.
So he's about to earn 5 months worth of wages, sat on his backside. I mean that nicely. He's put the work in though, so he understands what he's doing. He's actually adapted halfway through his challenge to just moving into some of the gold stuff and whatever. And he's managed to use the tool to drive his account to that result. And
one of the question I have is that, given that a lot of the people that are going to be passing these challenges through your program will probably be using your tool, isn't there kind of like a don't know what's the word is, basically companies like FTMO and I believe, well, not FTMO, Funded Talent, some of them don't offer EAs, don't allow EAs just because if lots of people
their risk management,
using the same EA,
totally right.
So could that be an issue for you guys in terms of, not an issue, but if everyone's using the same EAs and then maybe
this is one of the reasons why I want people to understand what it is that they're adjusting, right? Because if this was a set and forget EA, which it is to a point, especially if you're running on a live account, you could choose some settings and off you go, but you're not understanding the tool then, are you? But because I had the question the other day, this is why this bandwagon effect and everyone following, it is an important one to consider. If you understand the tool, you know how to make your trades unique, by small changes here and there. And the instant hedging approach, every single account is unique because every minute that you turn it on is unique in terms of the trade lot, how it trades, right? So if you turned on the instant hedging approach now and I turned it on 15 minutes later, then we're in different trades. And also, a slight change for me for a 5 pip step higher than yours, or tweaking the lot profit by 5 or 10, or changing the lot size, or how that works. There are probably 7 or 8 key mechanics and parameters to make that unique.
So the variables mitigate it from everyone entering the same positions and okay, that makes sense.
And definitely. But again, my view is it's no different to traders following a signals group. There are some big groups out there. And everyone being in the same sort of trade anyway. So
that's true.
I think, there is always liability to these like that, probably even more so than what we're doing. But no, it's a good and valid question, and something that we've discussed and opened up about how to make sure that your accounts are unique and you're understanding the tool to be able to do that.
Awesome. So what would you say is well, you kind of answered this question already. Where do you see the future of Power EA?
In terms of like the trading strategies, just continuing to support. We're always have been a group, and myself and Connor, that are forward thinking with, right, how can we make this better? And we know that by being present in the community, in the chats and the ticket system and the help that we have. if we keep seeing the same question, then we know maybe what we've done, or there's an opportunity to try and improve here or do that. Like we've just released an update today, and all it does is show the lock profit, the MetaTrader 5, because people are like, I'm not quite sure when this lock profit might kick in. So we just added a visual line that they can see, okay, that's when it's going to kick in, right? Just so that helps mitigate that. So but in terms of developing it further, there's probably, other than the normal housekeeping stuff, not a lot to reinvent the wheel with.
Yeah.
Where we're going next is launching soon a hypnosis program that will be circa a 5 to 6 month program, but could be something that you have forever. I've got a hypnotist, working on it right now. We've gone through the 5 or 6 modules and the affirmations and what to listen to.
That's interesting.
Already. And I think it's so important that there are lots of experienced traders that have been in the market for a long time that are scarred by previous experiences that affects their ability to stay rational and emotionless now. People say things like, oh, I don't trade gold because gold did this to me years ago. Well, gold did nothing to you years ago. It was what you did, right? So we do need to change how we talk to ourselves in our head. And our beliefs can have massive consequences. So if something happens, if our belief is that the markets are out to get us and I can't accept this loss, then you chase the loss and blow your account. But if this trigger happens and your belief is that it's just another trade, I'm totally calm, I'm totally detached from these outcomes, that's fine. Then there's no chasing losses and blowing your account. This is a key part. And then to support that a little bit further down the line, there'll be a coaching program that we launch. But I think courses don't work in the main because people don't do the work. But if it's a coaching program, that I'm thinking a 6-month program, going through these psychological and the way we trade, how that synergizes together, but ultimately giving people the accountability to make sure they step up and they do it and they stay consistent with one approach. We give up too easily as humans sometimes. That three trades lost, this strategy is a load of shit, I'm now going to go and try and find the next thing, when actually your 4th and 5th probably would have covered that back round. And we can see all that in the data, and that's why I like to trade with fact. It's fact, isn't it?
Numbers don't lie. Men lie.
No, I've said that today. They don't lie. But what does it predict the future? No. But can we predict the future anyway? No. So is it better than not having it?
Exactly.
Exactly. Because we, at the end of the day, seeing how something's played out over 800 trades, there's a fair stab at that, isn't there, really? But also, let's not just look at that. There's the forward testing element, right? So we invested in Walk Forward Pro with our EA, which robust and stress tests your EA at different stages. So you can basically go, right, I'm taking this 3-year period. I'm going to break it up into smaller chunks and test 3 months back and then forward 3 months. Test 3 months back and forward 3 months. So we're about to hit that again to look at how, let's say, the last 3 years, how it's predicted the future in effect. So what I mean by that is, if we can work 3 months in arrears with 3 months past data to how it called the 3 months future data, then that's quite a nice agile way to trade. However, what that won't help us with is things like FTMO challenges and stuff like that, because this is based on net profit and CAGR and all of that stuff. How we did the challenge pass stuff was by building a custom criterion into the EA that enabled us to press a button and back test based on what gives us the highest probability of a pass. And that
in 1
threw
month,
up,
and under 5%.
That threw up numbers and settings that we'd never even really would have thought about running. because they're quite aggressive. But
Yeah,
they
it
need
has to be
aggressive for
Yeah,
them to work with. Yes, totally right.
I'm guessing. I'm even just guessing straight away. I'm sure it's something where it has a low risk amount, and then once it hits about 4%, then you have to double it or something like that. Because that's a lot of the strategy that most people use. I've seen a lot of people be successful with, where you try and make small trades that get you to, like, if you're on a 100K account, try and get you to 2K, and then risk like half of that 2K to get you to 10K.
Yeah, well, interestingly, ours is not that at all. Okay. But I do like the logic behind what those guys talk about, because it makes mathematical sense.
Yeah.
Ours is going hard and fast, and the longer you're in a swimming pool, the wetter you get to a point, I guess. And the more you're exposed to the market, the more likely something might go against you.
Yeah.
So some of these settings do work quite quickly, but I always say as well, it makes totally logical sense. If you can pull the risk back a bit, build your account up to 100 and 304K, you've almost guaranteed a risk-free retry then, because you can then turn it up to do whatever you need to do, knowing that, okay, if you hit your stop loss or whatever, you'll wait for the next opportunity. So it does make sense. And, there are numerous settings and approaches that we've got that you can adjust, adapt, and right, I'm going to adjust this lot size and take it down a bit. I can do all of these things once you understand, okay, what is the tool doing? What are these settings telling me? Why do these work? And how can I, adjust that to suit?
Awesome.
Because we looked at, just because there's the banker and the strategy, we looked at, and we will do release soon, a reversal strategy for Pine Script. I've got some trading view ideas that I'm sharing right now, building up a history of that in terms of, I guess, a live forward test scenario. And asymmetric compounding is the thing. So
that's what I was thinking of.
You double your risk, and when you've got a win rate of, I think, 55 to 65%, even on a 1-to-1 risk to reward, that can fly. And we're lucky that we've got a guy called Rob in our community who's an Excel wizard. So we've taken some calculations, and he's created these documents based on calculating probability, simulation, and also taking our data and adding an asymmetric compounding function to it. So you can see the normal, I can't do this right here, the normal compounding curve might be this, but an asymmetric, takes off. Powerful stuff. And this is what's good about the markets, isn't it? There are loads of opportunity, but that also can lead to total overwhelm.
Exactly, and that's paralysis. But that's what happens as a discretionary trade. At least you got the data to back it up, and you can back test to see what works, even if you have lots of different variables.
And what's the worst case scenario that we've seen in the past? Well, in the past we've seen, this happen. Okay, and that instills more resilience and patience to the job in hand, doesn't it? It's when nobody knows, people following groups, jumping on random trade ideas and wondering why it's not working for them. They have no edge, and it's literally they're hoping for this probability to just play out enough for them to make money, because probability works both ways. Even something that 80% fails is going to work 20% of the time, exactly, right? But no, it's all good. So hypnosis and coaching program moving forward.
That sounds amazing, to be honest. I've joined lots of different communities, and they always obviously have like a psychologist on board or something like that. But I've never heard of a hypnosis program. That's something really, that's not something new.
And the good news is it won't take much effort, because you listen to it whilst you're nodding off.
Yeah, exactly.
So I think most people will be able to do that. What we're going to do is do like a clip of it on our YouTube, but with a kaleidoscope meditation. They're fascinating as well. So I'm tempted we will be testing, obviously, before launch with a small group of people. And I want to test the effectiveness of it, not only before you nod off, but also you get up in the morning, and one of the first things you do before, because this is going to work for any trader. So if you're a technical analysis trader, great, no drama. This is going to in the right state with the right internal language, and watching some meditation with the affirmations in the background. That can't do any harm, can it?
got some ASMR music playing in the background. Someone whispering.
Yeah. So hey, look, the brainwave stuff.
Stop revenge trading.
Yeah, it will. But it will also. One of the guys I've worked with for a long time, Joel, who's going to be involved in this too. Yeah. He kept an emotional journal and did his meditation, and all of this stuff has a massive ripple life too. So that can only be beneficial.
All right, Darren, thanks for joining us. This has been really useful. It's very interesting getting the thoughts from someone that's so far into their journey, especially with the EA. I'm normally talking to discretionary and technical and traders, but this has really been interesting. I'll be interested to follow the journey for you and the team at Power EA. But yeah, I'll definitely be checking that out.